XRP trending on the NASDAQ alongside NASDAQ, Apple, and the Dow Jones. Hey, what's up guys? Kevin Cage here with another crypto update. This video is an absolute must-see. Let's kick it off. Okay guys, first up, so this news came out a while back, but this is super relevant because this is kicking off starting next week on June 1st. We have China's Central Television Network just broadcasted the news that Hong Kong is allowing retail investors to buy Bitcoin. So Hong Kong's securities regulator announced it will allow retail trading of certain crypto assets starting June 1st, including Bitcoin, which is a big deal. I shared my full macro thoughts on the Bitcoin price chart in the first 10 minutes of this video. Please check it out if you have time. We talked about some lower gaps and targets as well. And I personally believe after this pullback is finished that Bitcoin is still heading to the CME gap near $34,800 at the 382 Fibonacci retracement, and then north of 40K towards the 50% retracement or the R1 weekly pivot. We have done this for 3 cycles in a row over the past 10 years. Yes, it takes time, but I do believe this comes. Also, if Ripple the company is one of the companies to invest in a $40 million fund for decentralized infrastructure, this is called Dispersion Capital. And you can learn more at dispersion.xyz. So they're pioneering a multi-chain, multi-currency, and multi-platform world. Something to keep in mind, and just remember with Ripple's recent acquisition of owning 100% of Medico. And right here, technology mandated by 6 out of the top 10 global custodians. That's huge. And Ripple the company acquired 100% of the Swiss-based custodian Medico. The growing institutional crypto custody market is expected to reach a staggering $10 trillion by 2030. And just like the CEO of Binance says, this is a big deal that the China Central Television just broadcasted cryptocurrency. The Chinese-speaking communities are buzzing. Historically, coverages like these lead to bull runs. Not saying past predicts the future and not financial advice. And I do believe this is a big deal with Hong Kong allowing retail investors to access licensed crypto exchanges. This could bring millions of new people to the crypto market and add billions of dollars in buy pressure to the crypto asset class. Next up for Casper, be sure to check this out. So we found this public address last time in a previous video, and we are looking at their WASM deploys. These are WebAssembly smart contract deployments, and this has to be some type of institutional partner. Could it be IPW launching the patents on the public chain, which is $7 to $10 billion in intellectual property value being monetized and put on Casper's public network. So we see WASM deploys as the contract type instead of just a standard or regular transfer. We can see the fee on the right hand side, just about 3 Casper. And these are not small deploys. This one is 1.6 million. This one is 1.1 million. This is 1.8 million. This is 1.8 million. We have 1.9 million, 1.9 million. So these are large amounts. Even right here, the last one is 3.7 million. Whether this is IPW actually beginning the minting process for these patents, which is 25 million patents at least. I've also heard figures and videos of the Casper Association actually saying 40 million. So it could be a lot more, but I am betting if it's not IPW, this is definitely another Fortune 500 customer. Now there are 2 recent well-written articles on Casper Labs' website, 2 blogs written by this guy, Matt Coolidge, VP of Global Communications. I highly recommend checking these out on casperlabs.io. We're going to quickly go through this and hit the most important points. The financial services sector is vast, encompassing fintech companies, banks, investment firms, insurance providers, and more. It traffics in some of the world's most valuable and most sensitive data. Its ability to monetize and secure it quite literally moves markets. Discussing the emergence of tokenization as well, real estate, patents, or any number of non-traditional assets. Originated as a means to protect customer payment data, tokenization works by assigning information a unique identifier called a token. While tokens represent valuable information, they offer no value on their own. A common analogy is a poker chip at a casino. It represents money, but anywhere else it's simply a plastic coin. Now why would we do this, and what's the point of tokenization? By tokenizing data and other assets, businesses can effectively safeguard bank accounts, investments, contracts, policies, and much more, all while realizing new monetization opportunities. And doing so in blockchain environments brings businesses even greater value, including increased trust via immutable and transparent ledgers that can be audited. You have an audit trail. We have asset liquidity, another huge benefit, and operational efficiency thanks to how much of the process can be automated. With disintermediation, getting rid of all the middlemen that typically are leeches and take fees, it has to go through them, so the process takes a lot longer, etc. And this trend is catching on. A fast-growing market, the global tokenization market size is projected to reach $5.6 billion by 2026. Meanwhile, we have other figures from the Boston Consulting Group right here with asset tokenization reaching 16 trillion by 2030. This is 10% of global GDP. 2020 total assets under management for ETFs were 7 trillion, and total real estate investment trusts or REITs were worth 2.5 trillion in 2021. And this concept of asset tokenization refers to using blockchain to create tokens for financial and real-world assets from equities, bonds, other asset classes, precious metals, art, real estate, collectibles, commodities, and patents, intellectual property. And I really like this part: 3 ways blockchain strengthens tokenization. Many types of financial services institutions have already begun to take advantage of tokenization. Credit card companies, for example, can tokenize a customer's account number by removing it from internal records and replacing it with a randomly generated and unique placeholder. And this protects the cardholder's information from potential fraud during commerce transactions. Very interesting. If a hacker gets access to the token that's actually replaced with a fake number, an identifier number rather than the actual sensitive account information, they won't actually be able to access the customer's account. This is a game changer. So this is known as vault tokenization. It's one of the early types of tokenization, developed before blockchain tech emerged to offer additional benefits such as ownership protection. But there's a lot more benefits for true asset tokenization. And today, thanks to blockchain and actual application to enterprises, tokens can be securely created, stored, traded, and exchanged. Tokenizing this data helps businesses secure customer information. Creating tokens on a blockchain network increases security thanks to its distributed manner. Absolutely. Because each piece of data is stored on an individual block that connects through a cryptographic chain, it's impossible to tamper with the information. So a huge benefit of connecting to a public network. Because everybody just thinks that private networks are the future, that is false. Public networks do have massive benefits in this space, and that's why I think the future of enterprise adoption is going to be hybrid. It will be public, it will be private, and they're going to have hybrid solutions in the middle as well, depending on the customer and the end user's needs. So even if they have parts that are on the private chain for compliance or HIPAA compliance to keep health records that are safe and secure in a private manner, I get that. But they're likely still going to connect to the public chain for better security, for liquidity and trust. And unlike data stored in the cloud or on a server, information stored on blockchain tech is independently validated by designated users on the network, meaning that each transaction is proven to be legitimate, which is still a huge issue today. And tokenizing assets on blockchain helps financial services companies build greater liquidity. So not just security and being tamper-proof and having an audit trail and having a much better public image because you have trust, we can see another benefit would be increased or greater liquidity. For example, real-world assets like gold have a high dollar value, but only a percentage of these assets are actually liquid. That's because in order for real-world assets to have liquidity, ownership stake needs to be distributed. By tokenizing gold on blockchain, companies can easily trade its value in an open market. So for example, let's imagine that assets in the top 100 are being leveraged with their public network for liquidity, for tokenized assets. Hypothetically, all of that trading could occur on a DEX, such as the native DEX on the XRP ledger for tokenization. It could occur and also be computation on the network and burn Casper or CSPR or HBAR for this example. There's a lot of different ways that this could play out. And lastly, relinquishing dependence on third parties enables businesses to operate more efficiently. When new assets like gold, real estate, or financial contracts, hint hint, the Actis standard, which accounts for 98% of all financial contracts in the world, the Actis Foundation is working with Casper, are tokenized and stored on blockchain, investors can release their dependence on brokers or third parties, which are traditionally required for trading and have additional fees. This means financial services businesses can execute processes faster and cheaper than ever before. So speaking of what I just mentioned with Nucleus Finance, be sure to visit nucleusfinance.com. I believe this is going to be absolutely massive. Again, Actis and Casper. This is 98% of all financial contracts. Mortgages, bonds, etc. And they are building on Casper with a joint venture with Nucleus Finance. And they're partnered with WM Dot & Service as well for asset tokenization using tokenization as a service. So we can see Casper Labs right there. And then up top, WM Dot & Service is the central authority and data provider for the global financial market. Nucleus Finance is a financial services company that pulls client investments and savings into one place for easier managing and tracking. A core element of their business is creating financial contracts, a cornerstone of the financial services industry that defines payment exchanges. But today, financial contracts are thick documents that are time-consuming to compile. That's why Nucleus Finance partnered with Casper Labs to build tokenization as a service, a TaaS solution on Casper's blockchain. And we can see Nucleus Finance is built on Casper Network, the first truly enterprise-grade blockchain network. There are other L1s, maybe some have decent scalability, maybe some have a better DeFi ecosystem, but Casper is upgradable, it is modular, and the future is unwritten, so they can change as business needs change. For upgradability, that is so important to stay compliant with regulators, and enterprises absolutely need that. And a key point I heard from another Casper interview was that they take their feedback directly from their enterprise clients. If enterprise clients right now are building on Ethereum and they reach out to the Ethereum Foundation, Ethereum is not going to pivot and adjust and fix things just for one single Fortune 500. I just don't see that being the case. Whereas Casper Network has Casper Labs, Casper Association, they have different subsets and a professional services company. So for these Fortune 500 clients, they have a phone number, they have support, they have contacts to call when they need to fix something, change something, adapt anything, which I think is very important. So this tokenization service translates financial instrument data, including stocks, ETFs, real estate investment trusts, and more, into Actis smart financial contracts. The result is a native financial digital asset that's machine readable, which means Nucleus can deliver faster trading and settlement times for its clients. And I truly mean this. Yes, the ISO standard is huge and all these other technical committee standards, even that of QNT, it's a big deal. But Actis is one of the 3 largest data standards in the world. Of course, we have ISO, you have Actis, and you have FIX. So do not sleep on this. Actis represents 98% of all financial contracts in the world in the global financial system. That's a big deal. And when I first heard this, I thought this was made up. There are only 32 contract types that can be replaced with smart contracts to represent the global financial system. And this, for the Actis standard, is happening on Casper. So I guess regarding that source, the tokenization market size right here in 2021 was 2.3 billion, which is pretty tiny. It's projected to be 5.6 billion by the end of 2026, with a CAGR rate of 19%. But where is Boston Consulting Group getting an estimate of 16 trillion to as high as 68 trillion? We know that Swift also estimates, and I believe they're referring to trading volume of tokenized assets. The volume by 2027 is projected to be $24 trillion. So how large of a market would we need to have in terms of tokenization to have that type of trading volume? I think pretty big. Also, for anybody curious regarding staking Casper or anything in between, I just did a huge thread, kind of a compilation of a variety of posts I've made in the past. So feel free to bookmark this, going through tokenomics, going through partnerships, including the royal family of Abu Dhabi with Al Mascari or XRP, going through some good interviews I like, and then the staking and wallet tutorial. So if you follow me on Twitter, feel free to check this out. I just called it Huge Casper Thread Compilation. We also had shared by Roth Economin, the Atlanta Fed released a report, Web3 and Finance, that mentions the company Ripple. They discuss XRP as an international payment medium or wholesale settlement coin. Now, across the board, we had the BIS, you had a few organizations refer to XRP, the asset native to the XRP ledger, as a wholesale settlement use case, which is a lot bigger than just retail. I do find it interesting that the use case of XRP across the board, like the central bank of all central banks, we have the Atlanta Fed just saying wholesale settlement for XRP. So this is very interesting context, just as Roth Economin says, a brief overview of Project Mariana. So we can take a look right here. We have Ripple provides various services via the use of its native token, the XRP, which is roughly envisioned as an international payment medium or wholesale settlement coin. Interesting wording. So whenever you see WCBDCs, that is wholesale. So Switzerland, Euro, Singapore, etc. We have Bank of France up here. They've specifically mentioned XRP before. The Swiss National Bank, SNB, that was the famous picture of Brad Garlinghouse on stage with the International Monetary Fund, with the Hong Kong Monetary Authority. That was at SNB, the Swiss National Bank, years ago. We have the Monetary Authority of Singapore. They've named Ripple the company multiple times. And just as Roth mentions, this article does not exclusively say they are going to use XRP. What's interesting is we are seeing a variety of projects and mentions from the Bank of International Settlements always dropping the company Ripple and even specifically mentioning XRP for wholesale central bank digital currency use cases. So I do find that to be super interesting. You can also see an AMM, an automated market maker for decentralized trading and settlement with central bank digital currencies. So providing liquidity, as we can see up here, liquidity providers. So it makes me wonder, with everything that Ripple the company is working on, It makes me wonder about the development of the XRP ledger with the automated market makers, and we've done dedicated videos on that in the past. It makes me wonder about the cross-border payments market. It makes me wonder what Ripple's doing with custody. There's a lot going on. I know we're in a lawsuit for over 2+ years, but I'm going to see this through. We also had an XRP ledger milestone. 80 million ledgers have been sealed or successfully closed. RippleX also unleashes Wave 6 of the XRP ledger grants program. And for any Casper Punk holders, the Generation 1 Casper Punks are now available, and you can redeem your mystery box for a punk. And just to finish up today's video, so we talked about Hong Kong starting June 1st, allowing retail investors to buy crypto on a licensed crypto exchange. We also have this from Tether, and we'll touch on this in the future. Starting this month, Tether will regularly allocate up to 15% of its net realized operating profits towards purchasing Bitcoin. These Bitcoin shall be considered on top of the minimum reserves assets that 100% back Tether tokens. So is this another potential catalyst or narrative that we're going to be hearing more of as Bitcoin's price appreciates in 2023? And last but not least, we have XRP trending on the NASDAQ alongside NASDAQ, Apple, and the Dow Jones. Shout out to Cryptic Life for the tag. Thank you, man. Very cool to see. And I do believe we're going to regularly see a variety of digital assets that are going to be trending on the NASDAQ in the future. The future is tokenization. The future is multi-chain. The future is trust, better liquidity, operational efficiency. I truly believe we're just in the early 2000s or maybe 1999 for the crypto asset class. Remember what happened? It took about 20 years that we saw the rise of social media, phone applications, and much more. So I think we're just getting started. The good news, we're early. And the bad news, we're early. If you enjoyed this video, I'd greatly appreciate if you could hit the like button. Let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description with all links, crypto resources, and discounts. I'll catch you in the next one.